Hi traders, so back for another episode of Technical Tuesdays. As it is, as per usual, it's a pre-recorded show. It'll be live on TradingView for any questions you may have during the stream. And yeah, let's get cracking. Okay, so we've got the dollar up on the charts here. Very interesting. Dollar's off today despite risk sentiment taking a bit of a turn for the worse. What's it down to? A couple things really. The COVID situation in China. People are getting worried that cases are rising there dramatically, and there's also fears that China might be helping Russia in terms of military equipment, etc., getting involved in the Ukraine war, and what that might mean for other countries getting involved in this invasion. Will it have a wider sort of net? So yeah, let's look at the chart here. So we got the dollar. It's hovering just below that previous high around 99.5, and it's come off a bit now. A 21-day exponential moving average is still providing us this sort of dynamic support on the upside. We'll see what happens. The RSI's turned back out of overbought. I'd say the next sort of major level to watch would be here. There's a bit of support around this 98 level, just above that 21-day exponential moving average. Below there, we start coming back closer to potentially these sort of highs we saw back there, breach above that major range resistance. That was about 97.378. On the upside, I'd target that former high at 99.5, and then above there 100. Got the Fed meeting up on Wednesday. Got some interesting catalysts for the dollar. So we'll have to see if that can maybe nudge it higher. Let's move on to Euro USD. Euro USD's moved back up above that lower line of the descending channel. We've got the 21-day exponential moving average not too far above. The RSI is trying to have a run out of deeply oversold territory. It'll be interesting to see what price does at the 110 area. And on the downside, I'd look back towards this 108 low. Moving on to cable. Cable's just clinging on for dear life above this 130 psychological round number level. The RSI hasn't moved out of oversold territory yet. Tiny bit of negative divergence here as price made some lower lows. The RSI's made some higher lows. We'll see if that can cause cable to have a little rebound higher. Rallies, I'd look towards this level here where we saw stickiness support at around 131.8, just shy of 132. We got the 21-day exponential moving average above there too. Let's move on to, if it breaks 130, I think, then that's going to really see a strong sell-off. Euro GBP pushing higher once again. We're coming very close to that 200-day simple moving average. We're also very close to the 63.68 level on the RSI, which is obviously going to, it's capped previous price rally, so it'll be interesting to see if the upper line of the descending channel, the 200-day simple moving average, and the RSI reaching close to its previous levels where price peaks were capped, if it does act as resistance for Euro GBP. That will be very interesting to note and to keep an eye on the upside. If it breaks there, well, where can it go? Well, it can probably test these former levels up here at 0.855, and on the downside, potentially a rally, a pullback back to 8, the round number 0.84, and between there at 835, we've got the 50-day simple moving average and the 21-day exponential moving average. Let's move on to US dollar JPY. We've got, it's come back a bit. The RSI hit overbought. It surged up very quickly, swiftly, and now we're rolling over a tiny bit here. If we get a pull back to 116, that would be where I'd be watching. On the upside, 120 for me is important in terms of where price could potentially go. I just want to pull up the charts of the Nasdaq quickly. Here we go on the Nasdaq. We've got a bit of negative divergence here. Price making a series of lower lows, but the RSI is making a series of higher highs. And however, we are right on this 13K level, which if that breaks, then it could be trouble for the Nasdaq. Where's the next major level of support? I'd say it's around here at about 12,760. So that would be the next level I'd be watching if the 13K level goes away. I've drawn in this downtrend line. We've got the 21-day exponential moving average capping those upside rallies. And if price was to rally, we've got a confluence of resistance over here from the 21-day exponential moving average and the downtrend line, as well as the horizontal resistance. Let's also pull up the S&P 500 quickly. S&P or US 500. Okay, so we're on the basically the bottom of that range support at around 44153 on the upside. We've got 43 with the 21-day exponential moving average there too. We've had a death cross on the S&P 500. We've got this negative divergence on the RSI. Series of higher lows while price makes a series of lower lows. So that's interesting to keep on the radar. Let's move on to AUD JPY. So again, risk sentiment, commodity prices have come off a bit. So now the terms of trade tailwind isn't helping the Aussie dollar as much. We've also got the sentiment in China worsening, and that tends to have a bit of a beta sense. The Australian dollar tends to have a bit of a sensitivity to that. It was just shy of overbought, and now it's moved back below there. Let's see what the AUD JPY does around the 21-day exponential moving average. And if we see a further sell-off, maybe down to the 50-day. On upside increase, I'd look towards that 86 on pushes higher. Let's pull up AUD US dollar, AUD USD. Let's have a little squiz here. Okay, so price got below in the early hours of my morning time, below intraday. It got below that 50-day simple moving average. It hasn't closed below there yet, so we'll have to see how this session brings, the European session and the New York later. We've got the 200-day simple moving average above there for price rallies, and below there we've got this key level of support around 0.71, and below that 0.7. We'll have to see what price does here. Aussie dollar's not liking the risk sentiment. The RSI still got a bit of room to run before it becomes oversold too. Let's move on to gold. So gold got up on that indicator, created the percentage above below the moving average 50-day. It got above there, and the RSI also peaked around 80, and now it went up in a straight line. Now it's broken that level. It's coming back down. These sort of signals, they're not a definitive thing, but they do help you to see maybe a point where there could be an inflection point where price could turn around and move lower. And that is what we're seeing here in gold. Major next level of support, I'd say, is around this 1.9 level here. Bit of stickiness we can see there, and on the upside, $2,000 would be the target. But yeah, I think we're seeing some liquidations from speculative positions as we saw this massive surge up higher, maybe some hedge funds. And I think we're seeing something similar in spot Brent too. We've seen these liquidations. It's knocking on 100's door, which would be a key psychological level. Below there, we got 95 in the 50-day simple moving average. The RSI is moving lower now. Still got a bit of room before it could be considered oversold. We're at around 50 now, so sort of can't really decipher if it's an uptrend or downtrend, but it has broken this 21-day exponential moving average, which has held this trend quite nicely. It's a bit concerning for the bulls. What's the next catalyst going to be? That's key here. And then on the upside, I'd say 120 is the level to watch. Let's go to quickly to finish off with the Fed Fund futures. Basically, December 2022, last night we got up to 7 hikes. We're just shy of there now. March is still just shy of 1. But if you look at OIS swaps, it is pricing in a full 25 basis point hike. April's just below 1.5, 1.5. July's just below 4.5. September is just below 5.5. That's where we lie into the interest rate pricing. That's what the markets lined up with before this Fed meeting. So yeah, I hope you've enjoyed today's Technical Tuesdays, and I'll see you all next week.